Your most recent blog was, somewhat related to what we've been talking to, but it was just about the relationship breakdown between how the housing market has defied some of those economic indicators, and you grouped it into two lanes. One was the correlation between interest rates and home values, and the second one was, you just touched on it just a second ago, around the sentiment and sales. So can we talk on the first one, interest rates and home values? We've clearly seen the response initially to those rates was prices went south, but then it's recovered, to your point earlier in our conversation, to record highs in a lot of locations. So, how did you reconcile that for the benefit of our community when there's typically an inverse relationship between interest rate movements and home values, but it's seen that being defied?
Yeah, this was pretty extraordinary. I think when interest rates started moving through their most rapid rate hiking cycle on record, we certainly weren't expecting the housing market to get to fresh record highs. But it did by early 2023, despite the fact that there were even more rate hikes through 2023. This we put down to a couple of things. The first is that the pace of decline in the housing market that was occurring amid the start of rate hikes occurred as we reopened international borders. As we know, this has since led to record levels of net overseas migration of over 500,000 people coming into the country in the year to June 2023. Now, most overseas arrivals when they come to Australia are initially going to be renters, but that also transmits to higher rent values, which may attract investors into the market. And indeed, from the start of 2023, we started to see a recovery in investment activity. It also means that even though 60 to 70% of recent overseas arrivals are renting historically when they first get here, there is another chunk that will buy while they're in Australia, or plan to live in Australia and be owner occupiers longer term. So that could be feeding through to the higher demand that pushed up values that we saw through 2023. And even the reduction in the pace of decline through 2022. Another aspect is that I think this is kind of tied into people's speculation of the cash rate and the fact that the market can recover even off the perception that there will be a steadying in cash rates or a decline in the cash rate, is that a lot of high end buyers who were less reliant on debt were still participating in the housing market. And we know this because we saw data releases from APRA, which showed that the share of people borrowing on 10% deposits and 20% deposits was declining. So people were basically having to take out less debt in their data, which signified less debt dependent purchases, and they were buying into the lower end of town. So areas like Brisbane, Perth, and Adelaide, despite massive increases in interest rates, had barely seen property values affected. And since the onset of COVID through to January this year, we've seen increases of around 50%, 50%, in the housing markets of Perth, Adelaide, and Brisbane. So I think that the fundamental, migration position and tailwinds for those markets has defied interest rate rises.